TikTok may officially be banned this month. Today's jobs report has everyone in the market confused. And the market's pretty pissed too. Could Elon Musk's DOGE fail? And how does Walgreens skyrocket 27% on the day? At the same time, as California fires continue to rage, we get debates about politics, arson, and how in the world does California get exposed for a 117 million gallon reservoir right above the Pacific Palisades, sitting empty? What is going on? Must be climate change. Or is it? On today's Meet Kevin Report, news that makes you money. Hey, a quick note, in case you haven't realized yet, I try to put chapter markers at the bottom of all of these videos because I know sometimes people are looking for a quicker video or quicker update. Just look for the chapter markers that apply to you. The goal of the Meet Kevin Report is to get you as much varied information as possible so you can go about your daily life without having to try to pay attention to every single little bit of news that happens. Instead, just remember to look for your Meet Kevin Report every single afternoon, and I'll provide you a recap of everything that I'm watching, which usually has to do with politics, finance, real estate, and much more. So if you like that, follow along. So let's get started. First, DOGE. There are now claims that Elon Musk knows that DOGE, or the Department of Governmental Efficiency, is going to fail. I'd like to clarify that this is really just twisting what Elon Musk is saying. Elon Musk says that getting $2 trillion of cuts out of the government would end up being a goal for DOGE, but it's a goal that they know they might end up missing. But Elon Musk's best case scenario goal of $2 trillion of cuts, I want to make sure I said that correctly, $1 trillion of cuts, comes as a way of saying, hey, let's aim for the stars, or as they like to say, let's shoot for the moon, and even if we miss, we'll end up amongst the stars, right? This is a way of him saying, look, if we aim for $2 trillion in cuts, maybe we get $1 trillion of cuts, and we still see that as a potential boon and success. Elon says there's no shortage of being able to cut from the government expenditures because, quite frankly, when people are spending other people's money, it's really easy to find places to cut. So Elon Musk is really optimistic in DOGE, and I don't think he's really claiming that he thinks DOGE is going to fail, but that's not stopping critics of Elon Musk from saying, oh, DOGE is going to be a big failure. I mean, frankly, let's see what they can do. Do I think that government gridlock is going to enable all of the change that they want to accomplish? No, of course not. I mean, it was hard enough to get Speaker Johnson, approved. You almost had Republicans vote against Speaker Johnson, and then we would have had a Democratic Speaker of the House, and that's before Trump even gets into office. So the margins are razor thin for Congress to actually authorize certain things. This is where a lot of people hope Donald Trump can just remove expenses via executive action, but we'll see. So I'm still positive on DOGE, and I just want to clarify, I don't think Elon Musk thinks DOGE is going to be a failure, but he knows there are challenges up ahead. On macro, obviously a big deal today, the jobs report came out. Now, it's worth looking at some reactions first. Goldman Sachs thinks after this jobs report that we're only looking at maybe 2 rate cuts this year, the first potentially getting kicked back to June. Bank of America actually thinks rate increases are now more likely than rate cuts. JP Morgan only sees 2 rate cuts this year, and Citibank thinks the earliest cut we're going to get is May. Right now, markets are pricing in for the first cut in interest rate policy to come sometime between June and July. By July, we get to about a minus 83 basis point move. So we don't actually fully price in a full cut until September of 2025, with only a 2% chance of actually getting a cut in January and a 25% chance of a cut in March. Now, why is this happening? Well, it's all happening because of the jobs report that we got this morning. And I have to tell you, the jobs report was actually really impressive. Goldman Sachs yesterday thought jobs would come in at 120 to 125,000. I personally thought we would have gotten something around expectations, around 165,000, mostly because I didn't think you would start to see layoffs in December. You usually see them in January, Feb, March. But we were both wrong. We actually got 256,000 jobs, which was a 4 sigma beat over the average, 4 standard deviation beat over the average estimate, which kind of makes you wonder, like, what's the point of all these Wall Street estimates? But anyway, average hourly earnings matched, and this should be really good news because, as I said yesterday, hey, if we get anything close to expectations, it's going to be good because it means we're not running into a recession. Like, if we got a minus 100K, it'd be recessionary. Well, we got 256, which is like the opposite of recession, but it's so far the opposite of recession. And we spent a lot of time in the course member live stream, about an hour this morning, talking about this and strategies. But this is so far above expectations that markets actually sold off today because the news is so good that some people actually think, I mean, here's the NASDAQ down, 1.56% today, and Bitcoin bouncing around 94K. I think even Tesla was mostly flat and trading most of the day, but obviously ended slightly red there. But the point is, these numbers are so good that people are now concerned the Federal Reserve is going to talk about hiking again as inflation potentially takes hold. Now, the good news here to sort of offset this is Goolsby over at the Federal Reserve. I give this guy respect. Okay, I actually, originally when he came on the scene, everybody's like, that's Foolsby. Who's this guy, right? Nobody gave this guy any credit at all. And I have to say, I mean, it was, everybody kind of hopped on the bandwagon there because he was kind of this newer, weird kind of guy who was like, well, everything's fine. This is going to happen. And so people thought he was a little goofy. I have to say, his interview on CNBC this morning, which we watched during the course member live stream as well, is actually really good. He says, look, the speed of cutting is going to slow, and that is going to affect long rates. But we have to pay attention to the uninverting of the yield curve. Is the yield curve uninverting because we are normalizing, or is something else going on? Now, this is really interesting because this is the first reasonable Fed member that I'm hearing actually saying there are two risks here. We could actually be potentially over-tightening and then cause a crash. So we have to be careful not to do that, especially in the face of good data. And then Sarah Eisen comes in and goes, but what about inflation? 12-month inflation is up and it's barely making any progress. And look, I respect Sarah a lot, but Goolsby shut her down hard. He goes, look, Sarah, the beginning of 2024 had a bump in inflation, and the 12-month figures count that. But if you ignore that bump at the end of last year and look at what's happened over the last 6 months, which is much more recent data, the PCE levels are at just 1.6%, with core PCE sitting at 2.2% over the last 6 months, which means if we continue what has happened the last 6 months in the next 6 months, those 12-month readings, which we're going to be lapping those higher Q1 numbers, are actually going to mean we're below target on inflation. Now, I want to be clear. That's kind of a brilliant analysis because just yesterday we were talking about how we're going to be lapping higher inflation from last year and we'll probably get lower numbers. CPI and PPI come out next week, and Bloomberg Intelligence actually thinks that markets might rally going into CPI and PPI as people start digesting. Okay, no. This is actually good. Inflation is down and the economy is strong thanks to this jobs report. Honestly, I agree with this. I substantially increased my bear bull scale today because I'm like, wait, this is actually fantastic because I don't believe that inflation is going to stick around. And I agree with Goolsby, but I'm grateful that he's analyzing both sides of the equation. Look, everybody's going to have a different opinion on this, and obviously time will tell, especially in the face of tariffs. But what he says is there's not a lot of evidence right now that the economy is overheating, and the Fed has to be careful that they don't go too far to the tightening side. Because what if the yield curve is actually signaling something worse to us? What if we was actually, and he used this word, what if what we've been getting is actually transitory productivity, where you had a 2023 and 2024 that was boosted up by artificial intelligence productivity that was really just a lot of CapEx spending and new investment into this sort of AI world? But what if that starts fading away and we don't get those year-over-year gains anymore for productivity? Then you're left with transitory productivity, and you potentially end up having a productivity either flatlining or crash in 2025 or 6. So this is interesting, and I'm actually grateful to hear these perspectives because I appreciated his debate with Sarah Eisen, and I appreciate this perspective that he's aware of the yield curve either signaling a normalization or something worse. Historically, the yield curve doing what it's doing is really bad. But then again, this data today was really good, right? So it's like, this is very confusing. And as far as productivity growth, interesting perspective. Now, when I look deeper into the job numbers, I couldn't find anything that was bad. You know me, look, I'm a data kind of person. When the data is bad, I tell you it's bad, and then people like to leave comments like, oh, you're just being a bear. When the data is good, people leave me comments, and then I talk about how the data is good. People are like, oh, you're a flip-flopper, or, oh, you're just a blind bull. You just can't win when you're reporting this stuff. But I will say, I looked for something bad in today's jobs report, and either the jobs report is total BS, and it's all going to get revised away next year, or it was actually pretty good. The household revisions we were looking for, no real change. In fact, we showed 478,000 job gains in the household report, which is usually noisy, but that's way up from the negative reads we had the last couple reads. The jobs growth was actually pretty well diversified too. 33,000 in government, education and healthcare, 80, but we also got 43K in leisure and hospitality, 28K in business and professional, 10K in IT, 43.9K in trade. This was a diversified, good report. So, why then is the market falling? Well, honestly, I think it's just de-risking and degrossing by institutions. Usually when the market falls right at the market open, as it did right here, see this drop right at the market open to the low of the day, or going into the close, look at this bleed into the close. It's a sign of institutional or even fund degrossing, where people are taking risk off the table and they're saying, look, things are maybe priced to perfection right now, let's just wait and see. Now, I'm not encouraging anybody do that. I'm really not making any encouragement at all. I'm just letting you know what I'm observing is that's probably why we're seeing some negativity, especially since there's been some de-risking and debt payoff since the December 18th flip-flop of the Federal Reserve. Because see, you've got two camps at the Fed. You've got the Jerome Powell camp, who are basically like, nah, man, everything's fine. Economy's great. We won. And then you've got the Goolsby that are like, not so fast. You know, there could be reasons why we had this good bump in 23, 24. Will it last? Small note, somebody got mad at me yesterday for saying Trump bump because they thought it refers to a Trump pregnancy bump. I don't think they actually thought I meant that, but they just didn't like the illusion of that or picturing Donald Trump pregnant. Okay, why are we talking about this? Anyway, University of Michigan expectations beat on current conditions, but the 1-year and the 5 to 10-year inflation reads all beat at 3.3%. So not good because it sort of reactivates this fear that people have that inflation is going to come back. We'll see. Anyway, Bloomberg calls this situation a lose-lose, where they basically say the Donald Trump small cap trade has now gotten hosed, and a lot of the gains you're seeing in Donald Trump trades are sort of fading. In fact, if you jump over to the Russell 2000, you could see the peak here in the summer. You could see the peak that we had post-Trump. We are now below both of those peaks. I've been a big proponent of staying away from small caps because I see them as disproportionately risky if we end up going into a recession. Anyway, you have also got Bloomberg saying that any sign of growth now, which we're hoping to get really good numbers from Q4 earnings from tech companies and others, any signs of growth might actually just make the Federal Reserve more aggressive, which means potentially if you get a Fed that wants to even talk about or even remotely think about raising rates again, you actually end up with a 2022 market sell-off scenario again versus a recession-induced market sell-off. It seems like no matter what, the mainstream media is telling you everything's going to crash, and I'm just starting to get really skeptical of it all because the numbers today were good, and if they continue like this, it's going to turn into a buy-the-dip opportunity. I don't know. Anyway, China's central bank has suspended the purchases of treasuries on Friday, citing a shortage of bonds. This is basically a way of them trying to say, hey, stop making bond yields go so low. You are screwing up the market and making everybody think we're going into a deflationary spiral. How dare you? This is really normal interventionism from China. In fact, Xi Jinping was apparently so pissed at an economist who said that the Chinese government is misleading people with their data, and the data is probably worse than, or the data is probably looking a lot better than what the reality in China is. That person ended up getting censored by Xi Jinping almost directly. And the Chinese government is saying, hey, look, everything's fine. In fact, y'all should stop betting on excess expectation for monetary stimulus because everything's fine. Okay, so the POV of the Chinese government and central bank, basically the same thing, is we don't need to stimulate more because everything's fine. Our data's good. And the market's like, whoop. You get it. Anyway, China's autos, there was a front page story of this on the Wall Street Journal. I actually don't think I have it handy right. It doesn't matter. Front page story on the Wall Street Journal this morning. They talk about an elimination round coming for automotive manufacturers because of an inventory glut in 2025. And even though demand rose 5.5% in 2024, demand is far short of what the capacity is for autos, which means you could expect some more price wars for autos in 2025 and 26. Walgreens indicated fresh signs of stability with an earnings per share beat, adjusted earnings per share beat. They actually lost money. Their adjusted EPS, this adjusted number is ridiculous, came in at 52 cents versus 38 cents expected. And keep in mind, adjusted EPS numbers, they're usually designed to remove things that are like one-time in nature. So yes, sometimes they make sense, but people hear that and then they think the company's making money. I just want to be very clear. The company is losing money. But we will go through some of the good numbers. Sales came in greater than expected, $39.4 billion versus $37.3 expected. Even international and healthcare numbers beat slightly, which was good. Their operating cash flow is negative $140 million, but their free cash flow is actually positive, almost a couple $100 million, because they're selling and liquidating assets and locations that they have. So watch for that. Usually when companies are selling their assets to have positive cash flow, it's because they're out of cash. And quite frankly, they kind of are. They do have inventories and receivables. They've got inventories around $10 billion and receivables around $6 billion, but they've got accrued expenses of $27 billion and less than $1 billion of cash, another $300 million in marketable securities. So when you add all of that together, they do not have a lot of cash to pay for all of the current debts that they have. They have $27 billion due in the next year, and they have less than 18 in the bank if you include inventories and receivables. This is why they're trying to get bought out by a private equity deal. But the problem is the company's got $5.9 billion in litigation expenses that are accrued payables, which aren't something you could just burn like Carvana burned the bondholders. It's a lot harder to do that with litigation expenses that you owe people or other long-term debts. So TBD how this company is going to claw its way out of debt. But in fairness, their sales did grow 7.4% year over year, although their cost of goods sold increased, so their gross profit was flat, which means their margin compressed. Donald Trump was unconditionally discharged via his sentence, so therefore he is convicted of fraud, but will suffer no jail time or monetary penalties. Donald Trump commented on him and Obama talking yesterday and suggesting, hey, there was a beautiful service yesterday. Yes, I talked to Obama and we got along. It's worth noting we just have different philosophies. I thought that was actually a pretty mature thing there of Donald Trump to say, which is a little different, but I thought it was still kind of funny for what John Fetterman said when he came out of the meeting at Mar-a-Lago with Donald Trump. First Democratic senator, by the way, to meet Donald Trump after the election. And he says he's meeting Donald Trump because he's a senator for all Pennsylvanians and not just Democrats. Big fan of that, by the way. Like that a lot. When he walked out of the meeting, apparently he said that he demanded Donald Trump make him the Pope of Greenland. In other news, Fetterman also said that he would be thrilled to work with Donald Trump on solving the Dreamers issue. These are children who entered the United States illegally because of the acts of their parents, but then grew up here and grew up as Americans, but never became legal. Facebook was on the Joe Rogan podcast to speak about the Biden administration and Biden administration officials yelling and swearing at Facebook officials, demanding that even true information or memes be censored and taken down. Zuck said they had to say no often, but as soon as they said no too often to the Biden administration, quote, all of a sudden, all of these agencies of the government wanted to come after Facebook and Meta. And frankly, this isn't a big secret, given that what we saw with the Twitter files revealed exactly this. The government, especially the Biden administration, weaponizing the FBI or contacts within the White House to get in touch with larger social media companies to shape narratives. Mark Zuckerberg says that one of the reasons Donald Trump won was probably because of the free flow of information on X, exposing a different perspective to the narratives that exist otherwise in a more censored realm. Now, this is not Mark Zuckerberg saying that it's good for people to be able to make threats or break laws or whatever, just like I don't think it's Mark Zuckerberg saying we should have censorship. I think Mark Zuck is actually just taking a pretty reasonable approach here, and it really marks this flip-flop from their prior stance, where previously it seemed like Mark Zuck was all for sort of defending what the Biden administration was doing, especially with the amount of money that they've donated to people like the Gavin Newsom's re-election campaigns or the Biden administration. And it feels like now that all of this is sort of getting exposed, Zuck is kind of like, yeah, I'm on the winning team after all. So like, I kind of still take what Mark Zuck says with a grain of salt. We knew this stuff was going on, and I'm grateful that he's starting to flip-flop, but I still have some questions about, the true motives of this recent, we're going to community notes, X-style, Musk-style POV that they have. Anyway, regarding TikTok, this is going to be a really interesting one. TikTok, okay. The Supreme Court today is hearing oral arguments about TikTok's ban. TikTok is expected to be banned this month, and Republicans and Democrats agree that TikTok is a threat to national security. It's worth noting that every time you open up TikTok on your phone, unless you've already given them permissions, the app basically demands, it's annoying, like every time, can we have access to your contacts? Can we have access to your contacts? They basically just download all your contacts and beam them up to China. Even though they say they hold the American data in American-based servers, the same data that's supposed to be on American-based servers has been found through hacks in Chinese-based servers, so like copies are being stored in China. There is obviously a lot to talk about this because there's a balance between the potential for disinformation campaigns put together by the Chinese government, the CCP, but then also data gathering of all of our contacts and what we're doing and what we're looking at, but then also trying to balance people's right to free speech. Right now, it looks like the court doesn't give a flying hoonies about the right to free speech, given that there's so many other ways to express yourself, which does suck for TikTok creators. But they argue that, hey, look, they're collecting too much information and they could influence our society in a way that we don't like. And if we uphold this ban of TikTok, then it will force TikTok to divest, which basically means sell the American portion of their business. ByteDance owns them, so ByteDance would have to divest that part. China, though, says we are going to block the sale of TikTok if the TikTok algorithm goes with it to the American company. So they want the algorithm. So this is going to be really interesting, and it probably will set up a boost to YouTube and Meta because they also have short form content, which is probably exactly why Mark Zuckerberg is starting to flip-flop in this way, because he's setting up for maybe an influx of viewers who use TikTok who are like, yeah, man, Zuck is cool now. Oh, boy. All right, you ready for the next part? California fires. Here we go. All right, so let's talk a little bit of history first. Now, 10 people are dead, which is absolutely terrible. But we got to talk about what's going on with this stockpiling of water. California approved state borrowing in 2014 for about $7.5 billion because of major droughts through Proposition 1 to build more reservoirs. That was 10 years ago. As of 2021, 3 years ago, the Associated Press said that none of these 6+ planned reservoirs had received any money or started construction. Now, the largest planned reservoir would be a proposed lake in Northern California, which would be the largest project in over 40 years. And people have been talking about this project for 50 years, but because of, quote, shifts in political priorities, it never happened. Part of that is because the environmental review, permitting, and water rights processes take so freaking long that completion of this reservoir is not expected until at the earliest 2030, if we even begin construction in 2026. This is because in California, people like Jerry Brown, who actually used to be the governor, say that, man, for every year of construction you want to do, expect 3 years of planning, permitting, and engineering in California. Opponents say, oh, well, you're going to use too much water on mixing concrete, and you're going to have to remove old buildings and relocate cemeteries, and we don't want you to relocate our old stuff. Or you're going to mess with our fish habitats. After all, climate change is causing these fires. Why are you trying to go around and build more dams? Well, the reality is California gets, or dams or reservoirs. Well, the reality is California gets plenty of water. The issue is it all runs off. That's because when we get snow melt on the Sierra Nevadas, which then melts off during the spring, most of that water doesn't get captured because we don't have the infrastructure to capture it all. We used to build these projects. Back in the 1960s, through the State Water Project, we approved and built over 10 dams. And California blew up its ability to actually collect more water back when our population was half the size of what it is today. But then people got upset because salmon and steelhead trout, which aren't endangered and can be farm raised or raised somewhere else, were slightly having their river habitats diverted, and therefore they couldn't get to where they nest, and everything paused. And this is how in the 1970s we got CEQA, which was a Ronald Reagan law that essentially allowed anybody with any beneficial or potential affected interest from any kind of project, housing, transit, infrastructure, drilling, solar farms, you name it, to be able to sue and hold up projects in litigation until environmental equality is determined. Now, Newsom says that he's able to get projects through the red tape faster through proposals like which have been passed, like Senate Bill 149, which was supposed to limit these blockages to 270-day challenges. But that's only if they're approved by the government by the governor, actually, as a pet project of the governor. So you can imagine only the Democratic projects get through because he's a Democratic governor with the Democratic legislature. And now all of a sudden, what? Nothing ends up getting done. In fact, this reservoir that people want to build up in Colusa County might begin construction in 2026, maybe, and it'll take 6 years to build, likely. Some people hope 2030, but I don't have hope that it's actually going to get done by 2030. So the point is, California really sucks at building when you need to. Nobody has the balls to actually issue an executive order and build what we need and then solve the side effects later. Everybody wants to stop and litigate every potential side effect first, and then nothing ends up getting done. Much like, for example, the Santa Ynez Reservoir sitting empty above the Pacific Palisades, which could have fed the damn hydrants that went dry in California during this fire that's going on the Pacific Palisades. I kid you not. Look at this. Here's the Getty Via and the Pacific Palisades, which we're going to talk about the fate of the Getty Via in just a moment and what it can actually tell us about climate change or fire prevention measures. You'll hear about that in just a moment. And you can see this higher in elevation Santa Ynez Reservoir is right here. And it houses 117 million gallons of water. The 3 tanks that serve the Palisades hold about 1 million gallons each. So that's, 30 times as much water right up here than those 3 tanks combined. Actually, well, what do you got? Yeah, more than that. It's almost 4 times as many gallons of water up there. And that reservoir is empty. Yeah, the left-leaning LA Times just did a whole expose about how this facility sits above the hydrants that ran dry, and it has been out of service due to a tear in the cover, and nobody has any idea as to when it's going to be brought back into service because the politicians just don't pay attention to it at all. So yeah, has there been an empty reservoir? Yep. Could it have helped mitigate some of the damage that caused in the Palisades? Yep. Now what do we have to deal with it as well? Or I guess instead? Well, the potential that all of these lost 9,000 single-family dwellings and apartments are going to cause a lot of rent inflation, given that just 24.3 thousand were granted permits in LA County in 2023, and you just lost 9,000 of them that are already built, or were already built. Now they're burned down. California climate change is the big excuse that people have. People say, oh, well, this is climate change. But the reality is California has been experiencing fires for thousands of years. Now, yes, fires have gotten worse, but there might be a reason they've gotten worse. First, though, one of the reasons we know that fires have been happening here for thousands of years is because chaparral shrubs like lilacs and manzanitas in California have adapted to getting burned down, and then their roots stay alive. They sprout up again, and now there's no competition for resources, and these plants can flourish. They're literally evolutionary predisposed to fires and surviving through them. Kind of crazy, but it shows you that, look, we've always had fires in California. Now, people say, oh, but winds have gotten worse, and that may be true, and certainly temperatures have been warmer, and the periods of time that things have been drier have been longer. So yeah, there is some argument that the environment certainly has changed over time. But it's hard to say if it's changing more, or if that change is more impactful on fires, or what we're doing is more impactful on fires. See, in the past, fires would sprout out all of the time in California, but they were generally smaller fires because they would burn and then they burn out. And because they were happening all of the time before, humans were inhabiting California, you were regularly doing, guess what? Clearing the dead plants. See, nature by itself was previously limiting really big fires because you had natural smaller fires that burned away that brush that's sitting dry everywhere. So nothing's really changed except we stopped the small fires. When times are not super windy, we're really good at fighting and putting out those small fires. So we put out the small fires, but then when we get a windy day, we get screwed because nobody's been conducting, or we certainly haven't been conducting as many, controlled burns to mitigate some of that leftover dry brush. And then a heavy wind comes through and we get a mega catastrophic fire that then burns lots of homes with it. Now, yes, this is an argument that managing our land actually matters. In fact, if you listen to what the Getty Via said, it's pretty incredible. Listen to how the Getty Via says they survived. They said that they survived despite the fire coming right up to their property. How? Because per those at the Getty Via, they extensively cleared brush. Their tree canopies were kept high above the grounds. Any low-lying brush had been thinned so much to where when some of these low-lying brush actually caught fire, they said it would just burn up like rosemary on the top of pizza and then put itself out. Because there was so little to burn. They'd catch fire, oh my gosh, fire, and they'd burn themselves out. There were small fires like at the entrance gates that were put out by fire extinguishers, but otherwise, they fought the fire with limited water by conducting preventative measures that helped save the Getty Via Historic Museum. This actually goes to show that there is a way you can manage the land. Now, finally, the LA Times is in the area. Planes are apparently now getting hit by drones that are floating around, which is not good. You have to be careful because the water capturing drones that exist, the water planes, they're called super scoopers that exist in California. They fly very, very low. A super scooper plane is about a $30 million plane. It flies usually down to about 100 feet above the earth to drop water. Larger Boeings will usually only get down to about 400 feet above the ground, AGL, above ground level. And so these get pretty low into that 0 to 400 range where drones will fly. And this is why generally they don't want people flying drones in the fire areas because of these efforts. One of these Canadian planes was damaged in the process, who were helping, and now this plane is grounded, which kind of sucks because you don't want these $30 million vehicles that are actually really effective to be grounded. They can dump up to 1,400 gallons of water in a swoop. It's incredible. The National Guard has finally showed up in LA. Meanwhile, Newsom is complaining about misinformation and disinformation to Biden via Zoom. There are also rumors circulating, unconfirmed right now, but there are rumors circulating that California at the moment is considering rezoning the Pacific Palisades to allow for multifamily home construction as opposed to single family construction. This is leading people to say this was all the plan all along. They wanted to make, here, look at this, it's a crazy video shot. They wanted to burn California down, specifically the Palisades, so they could bring in more low income housing. Now, I don't think that's exactly why these fires were caused, but I will agree that there probably are murmurings about rezoning because of this, and people want to be able to rebuild their single-family homes, but the permit process is probably going to make all of that massive hell. Especially since the insurance process is probably going to take a hot minute. I should say no pun intended there. Anyway, when it comes to insurance, State Farm obviously issued a letter to 72,000 policies that they will not renew in March. And another underwriter called Chubb said that they wouldn't underwrite policies anymore in California. And you have to say, look, everybody hates insurance, but the reality is when politicians are letting reservoirs go dry and hydrants fail, you got to kind of ask, if you were an insurance company, would you trust Newsom was doing all that he could be doing to minimize your risk as an insurance company? No, of course not. And then at the same time, California is telling you you can't raise your prices to try to help voters not have to pay higher insurance claims, which, don't get me wrong, or premiums. Nobody wants to pay higher insurance premiums, but you also understand that when politicians are making it more expensive for businesses to operate, the businesses are like, this doesn't make sense. In fact, the editorial board of the Wall Street Journal had a great math claim to this. They're like, look, it right now costs insurance companies $1.09 in expenses and claims for every $1 they collect in premiums. That doesn't even account for the operating expenses they have to exist. So they literally just light money on fire trying to work in California. California's like, nah, we don't need to fix our stupid problems in California. Let's just come up with the California Fair Plan, which will be a state-backed, no liability protection, fallback catastrophic insurance plan. And that'll provide property coverage up to $3 million. Cool, except here's the problem with that. There are probably way many more people on the California Fair Plan right now than the fund actually has money for. The fund only has $700 million in cash, which is enough for about 350 homes, and we just lost 9,000 structures. Now, they're not all on the Fair Plan, but the point is, you probably have more than 350 homes in the Palisades, $2 million cost to rebuild each, on there. But that's okay. That's not going to stop people like Steve Lopez, the same knucklehead that the other day said it's a compromise to live in California and you should pay over 50% in taxes for no water and fire hydrants and accept the compromise of living in California with forest fires and wildfires. The reason you should accept this is because that's just the price to pay to live in California. Well, that same clown has struck again. Yesterday, fires are a compromise of living in California. Today, going to Ghana, because the mayor of Los Angeles went to Ghana, and was gone. She was gone while the fire started, even though we knew the catastrophic winds were coming, has now written in the LA Times today, quote, generally speaking, I don't have a problem with the mayor of Los Angeles traveling the world, particularly when it's about fostering economic and cultural relationships that can benefit Los Angeles. Got it. Going to Ghana as the mayor of LA helps our culture and our economy. Understood. Thanks, Steve Lopez. I'ma plan my trip to Ghana to make sure I'm doing my part in keeping the economy up. Meanwhile, I actually sent him an email, and that email that I sent him is on screen right now. To which Michael Jones replies, succinct. Oh, boy. Okay. What else do we have? Then we've got the HOA talks about arson, and there's been, there was a lot of talk and there were videos of an arsonist potentially getting arrested yesterday, but they were arrested for a different felony, and the police actually said that they didn't have enough evidence that he was actually an arsonist. A lot of people think there are professional arsonists going around doing all of this, which is possible, but it's too soon to tell on this. So, with that said, in yesterday's Daily Wealth email, I had a question for you. Where are you in your real estate journey? Most importantly, what's next for you? If you're a tenant, are you becoming an owner? Forget about rates. Just start smaller. It'll make a great rental property in the future. If you already own a house, when are you buying a second? If you own a house and a rental, when are you buying your next? I want you to always be thinking about wedge deals and getting ahead in your investments, while at the same time thinking about yesterday's dad joke and today's. In case yesterday's dad joke went over your head or below your knees, the answer to yesterday's dad joke was, well, let me rephrase yesterday's dad joke. Yesterday's dad joke was, I ordered a chicken and egg on Amazon, and I said, I'll let you know. The joke is, what came first, the chicken or the egg? For today's dad joke, did you hear about the kidnapping at school? He's fine. He just woke up.